So now I'm going to flip over here to my actual bank reconciliation. Now to do this properly, we have to set this up. And the way we set this up is we put the name of the company first, which is Foster Company in this case. Bank reconciliation. Now this is going to be for the month of July, so it's as of July 31st. We have bank statement balance. On the left side, we have book balance on the right. We're going to have an area to add things and to deduct things on both sides. And then we're going to have an adjusted balance on both sides. And next to the adjusted balance, I'm just totaling everything up. And ultimately, what I want to see is I want to see the two balances match each other. If I can do that, then I'll know that the bank statement has been reconciled. So the first thing I want to plug in, my bank statement balance. So right here it says bank statement current balance $21,423. So I'm going to plug that in right there. Now what about my book balance? That was down here under the books, current balance $17,544. So I'm going to plug that in right there. So you see how initially the two balances don't match. But hopefully after I make all these adjustments, hopefully they will match. Now what are the problem areas? I'm going to go up here and first look at these deposits and credits. Everything I have an asterisk beside is okay. I only have to worry about the questionable ones. Well, right here I've got that $25 in interest. What that means is they deposited $25 of interest in my account, and I didn't know about that until I did this reconciliation. So what am I going to do with that $25? I'm going to go over here and I'm going to add that on the book side because that's something I didn't realize. I didn't know about that. Also, I've got this credit memo for $1,432. That's something that they collected for me, and I didn't know that. I didn't see that reflected on my books. So I'm going to add that as well, $1,432. So that way it will hopefully correct these two things. And I'll back this up and put an asterisk there to show that I've dealt with those. Now the next questionable thing is this check for $988. On the bank statement it says $988. Down here on my statement it says $888. So it's $100 off. What's the story behind that? Well, the story behind that was down here in this information. And it said check number 5,905 was correctly drawn for $988. It was used to pay for advertising, but it was misread by the accountant, and they entered it as $888. So what we should have done on our books is enter that at $988 rather than $888. So that's an extra $100. So how will I correct that? Well, I will deduct that on my books. That'll correct that. That was a mistake that we made. So that'll resolve that issue. Then I have down here on July 30th this $500 NSF. That was a non-sufficient funds check. I didn't know about that until I did this bank statement, this bank reconciliation. So that's going to have to be deducted. And it's going to be deducted from my books because that's $500 that I don't have that I thought I had. So now I've dealt with that one. Then I'm going to go down here and look at my deposits. The one questionable thing I have here is that $1,555 deposit. Now notice that I made it on July 30th. So probably what's happened is it's just not showing on the bank. It will eventually show in a couple of days. So I'll just add that to the bank side, $1,555. That's just a deposit in transit. And we talked about that in our video lecture. So that'll take care of that. Then I have the last thing. I have about 4 checks here that are outstanding checks. And what I want to do is total up all these outstanding checks. And that's going to give me an amount that I can actually deduct on the bank side of things. Now I want to make sure which ones of these checks are actually outstanding. I've got the check for 2020. I've got the check for $857, and I've got the check for $1,700. See, notice this $888. That's that check which was the $888-988. So that one's actually okay. But 2020 and and 857 and 1700, those three checks are outstanding. So what I want to do is include that on here. So I want to include the 2020, the 857, and the 1700. And I want these to be negative because those are outstanding checks that have yet to be deducted from the bank balance. So now that I've made the corrections, and I'll go back and remove those question marks. Now that I've dealt with everything and dealt with all these corrections, if I go and look at my bank reconciliation, I'm now reporting an adjusted balance, $18,401, $18,401. So once I get that to match, that shows that I have correctly reconciled my bank account. So that finishes part 1. Now for part 2, I'm now going to have to record some journal entries. Now how many journal entries am I going to have to record? Well, basically I'm going to have to do one entry for each adjustment, but only the adjustments made on this side. See, over here, all these adjustments on the bank side, I don't have to do anything about that. For example, that deposit of $1,555. Within a day or two, the bank is going to process that and it's going to show up in my account. Or these outstanding checks. Eventually, these checks are going to clear the bank. So I don't have to do anything there. But I do need to do something for all these adjustments on the book side. And there's 4 of them. The $25, the $1,432, the $100, and the $500. For each one of these, I do want to do a journal entry. So let's take these one at a time. What about that $25? What was that? That is where they put interest in my bank account. Interest of $25 because it said right here on the deposits 25 IN. So what I'll do on my journal entries at the end of July, 7/31, I'll do a journal entry for $25. Now that is money they put into my account. So I will debit cash for $25. What did I get this money for? For interest. So that is a credit to interest revenue. So basically I made $25 from interest on my account. So I'll record that as a journal entry. Now what's the next adjustment? Right here. The $1,432. What was the story on that? Well, that was right here. That was this $1,432 credit memo. I want to go down here and see what the details were about that. It says the credit memo was from an amount collected by the bank on behalf of the company, $1,500 less a $68 fee. So what I'll do then, on 7/31, I'll debit cash. They deposited $1,432 in my bank account. Down here on the bottom, I'll credit note receivable because it's a note that they collected on my behalf, and it was a $1,500 note. Now notice that it doesn't quite balance out. I've got $1,432 on the debit side, only $1,500 on the credit side. It's out of balance by how much? $68, which also happens to be that fee. So that is a bank fee. So that takes care of that adjustment. Now the next adjustment I'm going to have to make, or at least journal entry, is right here where I deducted that $100. So on 7/31, I'll do a $100 entry. Now this time I'm deducting money from my account, so I'm going to credit cash. Now what is that $100? Well, remember that was where we wrote that check and misread the amount, and it said in our information that that was to pay for advertising. So I'll debit advertising expense. Now one more adjustment, and this is going to be the adjustment that I will make for the $500. What was the story behind that? Well, that was that NSF check, and it was a bad check received from a customer. So I'll do a journal entry to account for that. So it's $500. It's being taken from cash, so I will credit cash. This was a bad check from a customer. We know what that means. That means the customer still owes me the money. If they still owe me the money, that's an account receivable. So those are the 4 journal entries that are required on Part 2 in order to make all the necessary corrections that we found on our bank statement reconciliation.